Hello there. So is it possible to get a high yielding, diversified monthly dividend income by buying just one stock? Well, in today's video, we're going to be discussing an ETF that claims to offer just that. If you don't know what an ETF is, don't worry, I'll explain that too. If you're new to this channel, welcome. My name's Andy, and on this channel, I like to talk about money and success. If you're interested in making, saving, or investing money, please be sure to hit that subscribe button down below, hit the notification bell, and then you'll get notified every time I release a new video. And if you enjoy this video and find it useful, please remember to give it a thumbs up, because that helps the YouTube algorithm, which in turn helps me, and of course, I do appreciate it. Now, it's fairly obvious why people may be attracted to a monthly dividend ETF or a monthly dividend stock. Anything that pays monthly dividends is always attractive, especially if you're used to receiving a monthly salary and you're looking to retire and replace that salary. Monthly dividends are obviously a great way to do that because you're used to getting the money monthly, and this allows you a completely passive way to do that. So I can understand why people will be attracted to it. I'm attracted to it myself. But what I'd like to know is, do you have a favorite monthly dividend stock or a favorite monthly dividend ETF? If you do, please do let me know in the comments down below, because it's always good to get other people's input and ideas, and that helps me find other options to consider investing in myself. So please do let me know in the comments down below. And also, if you'd like me to make a video about any particular monthly dividend stock, please feel free to request it in the comments down below, and I'll be happy to look into that. So let's start by what is an ETF. An ETF is an exchange traded fund, and let's have a look at the slides now. This is what Wikipedia have to say about an ETF. An exchange traded fund, ETF, is a type of an investment fund and exchange traded product. They are traded on stock exchanges. Now, I won't read the entire thing to you, but basically they're a bundle of shares. You can go back to that screen at any point in time you'd like to and have a read of that, but that information is directly from Wikipedia. Basically, it's a mini portfolio of shares, and the fund we're going to look at is one that specifically aims to give you a high dividend yield on a monthly basis. So it allows you to get a monthly passive income without having to analyze individual stocks and shares, which is what I personally prefer to do. But if you didn't want to have the hassle of that, you just wanted to buy into one fund, this is a fund you might want to consider. Now, bear in mind, I'm not a financial advisor, so this is not financial advice. You need to do your own due diligence and whatnot before you invest in any stocks or shares. I will go through this with you now, so you'll have a good overview of it. And at the end of the video, I'll also tell you what I would be looking for if I were to be investing in this particular stock, or ETF as it is in this instance. But let's now find out a little bit more about the ETF we're talking about. Its ticker symbol is DIV, DIV, and let's head over to its website now and learn a little bit more about it. So as you can see, it's from Global X, the ticker symbol is DIV, and it's the SuperDividend US ETF. The fund summary, as you can see there, it says the Global X SuperDividend US ETF DIV invests in 50 of the highest dividend yielding equity securities in the United States. Fund objective: the Global X SuperDividend US ETF DIV seeks to provide investment results that correspond generally to the price and yield performance before fees and expenses of the index SuperDividend US Low Volatility Index. Now, that is a key part there. They mentioned fees and expenses. That is the reason I personally don't usually invest in ETFs. I don't like to pay fees where I can possibly avoid it. When looking for a broker, again, you want to look for the lowest possible fees, but the fees on this we'll have a look at in a moment, and you'll be able to make your own decision on if you think it's worthwhile to take the hassle out of actually doing the research yourself. We're also going to take a look at what stocks and shares are in this actual fund as well. If you're interested in seeing individual stocks and shares, I've actually made a playlist. I've made many videos about monthly dividend stocks, and I'll put a link up there and in the description down below to a playlist of monthly dividend stocks videos, which includes many of my monthly, well, all of my monthly dividend stocks videos, including I made a video which was all of the monthly dividend stocks that haven't suspended the dividends in 2020. I made a monthly dividend stocks portfolio, makes $1,000 per month. So if you're interested in those, you can see it, as well as individual reviews of individual monthly dividend stocks as well. And what I will do for you with that playlist, I'll also make sure that that is a link to at the end of the video as well. So if you stay to the end of the video, you'll see I'll put a little thing on the screen where you'll be able to click on that and get to it there, or like I say, you'll be able to get to it in the description down below. But for now, let's carry on with this ETF review. Now, if you scroll down and look on the right hand side of their website here, like I say, I'll put a link to this website in the description down below. So if you do want to do more research yourself. Literally use the link in the description from this video to get to this website, and then you'll be able to get all of this data that I'm giving you now anyway. Stats and fees, you can see on the right hand side there, it shows you the net assets, the net asset value, shares outstanding, and then total expense ratio. That's your important figure there, 0.46%. So that 0.46% is what it will cost you to own these shares through this ETF, rather than buying all of the shares individually yourself. This is the charge, if you like, and if we put the mouse over there and click on that, it tells you this reflects the total annual expense associated with ownership of the fund, including but not limited to management fees, 12B1 fees, and acquired fund fees. Expenses refer to the fund's full or summary prospectus for more details. But that gives you the basic idea there. So 0.46% is the cost, so you have to decide, is it worth paying that cost to be in the fund, or would you rather spend the time to do the research yourself? That's the decision you need to make. So here you can see it says why DIV, so it's trying to sell the fund. High income potential. DIV accesses 50 of the highest dividend paying equities in the United States, potentially increasing a portfolio's yield. Monthly distributions. DIV makes distributions on a monthly basis and has made distributions each month for over 7 years. Low volatility. DIV's index methodology screens for equities that have exhibited low betas relative to the S&P 500 in an effort to produce low volatility returns. You can see on the right hand side there, it claims a distribution yield of 6.91%, a 12-month trailing yield of 8.59%, a 30-day SEC yield of 7.36%, and we'll head over to Seeking Alpha in a moment and have a look at what Seeking Alpha has to say about it as well. And I've also done some of my own calculations, so I'll share those with you as well shortly. Now it shows you the net asset value is $16.96 per share, which is exactly what he's selling for, so that's a good thing. I think the performance history is very interesting, because you can see here year to date it's actually down 24.98% and its market price is down at 25.07%. So that means if you'd had $100 worth of these shares at the beginning of 2020, by now, and it's the 28th of December 2020, you would now have lost $25 of that. Now bear in mind, you would have had $7 of income, you would have therefore lost 25 minus 7, so $18. So you would actually be down on the year if you were to buy it over this year. But then that's the case for quite a lot of stocks and shares, particularly the high dividend shares, which have been hit very badly in the current year. So let's have a look now how it's done over 3 months. Over 3 months, it's actually up 5.6%. If you looked at over 6 months, it's up 11.79%. Since inception, which was back in 2013, it's actually up 12.12% on the market price size. Now if you look at the average annualized value, and at the bottom there you can see a little note that explains what that is. Annualized return is the average return gained or lost by an investment each year over a given time period. Okay, so if we look at that section now, and we're going to look at the market price column, that's what we're really interested in because that's what you're paying. So over 1 year, it would be down 23.75%. Over 3 years, it would have been down 6.8%. And over 5 years, it would have been down 0.83%. Since inception, you would actually be up 1.49%. Now, I appreciate that really does not make it sound very impressive, does it? But bear with me and wait and see where we're going with this, okay? Please do continue with this. So next, let's look at the sector breakdown. So you can see if you were to invest in this fund, you'd have 22.9% in consumer staples, 20.8% in energy, 18.7% in real estate, 12.3% in utilities, 8.8% in financials, 8.4% in industrials, 5.2% in communication services, 2.3% in consumer discretionary, and 0.6% in other and cash. So reasonably well diversified fund there, I think we could agree with that. Here are its top 10 holdings. So you can see the top 10 holdings for this particular ETF. It's got 6.56% in BGS Foods, 3.75% in KHC, which is Kraft and Heinz, 3.39% with the ticker symbol FTAI, which is Fortress Transportation, 3.12% in General Mills, 3.08% in Delek Logistics, 2.97% in Brookfield, 2.91% in Verizon Communication. And I have made a video about Verizon versus AT&T. I'll put a link to that up there and in the description down below if you're interested in seeing that particular video. 2.85% in Universal Corp, 2.77% in Arbor Realty Trust, and 2.77% in Cross America Partners. Now, if you wanted to download the full listings, you would go to the website and you would click here on the top right where it says fullholdings.csv. I'm going to show you that file now. If you wanted to see the up-to-date, if you're watching this at some point in the future, navigate to this website. I will put a link in the description down below so that you can navigate to the website. Just navigate to this website. Like I say, there'll be a link in the description down below. Scroll down the page, go to this full holdings, click on that, it'll download the CSV file, and I'm showing you what it looks like right now for their full holdings. That may be different at different points in the future, so you probably want to have a look at that to check that out. So here's the full holdings list. So you can see there's a lot of popular companies on there. You can see, if you look midway down there, you can see ticker symbol T, AT&T Inc. So they haven't just gone for Verizon, they've actually covered both bases. They've got AT&T as well as. Now, if you're interested in AT&T, I've made a couple of videos about that. I'll put a link to the latest one that I've made up there and in the description down below. So if you are interested in learning more about AT&T, you can check that video out. And if you scroll down this list, you can see that's the full list there. So I'll leave that on the screen so you can take a good look at that anytime you want to. This list also could be useful for creating a list of high dividend stocks if you were wanting to create your own portfolio. You could go through this list, see which ones you do like, maybe buy those. Now, if I was going to invest in this, I would really want to drill down into each individual one of these stocks to see what I think of each stock. Do I think it's likely to go up? Do I think it's likely to go down? What potential for comeback has it potentially got? How likely is the dividend to be cut? Is the dividend likely to be raised? What's the history of the dividend? What's the balance sheet look like for the companies, and so on and so forth. So if you were to consider investing in the ETF, that probably is the research you should be doing, unless you want to go by blind faith and just trust the fund managers that they're doing the right thing. But me personally, I'm not very trusting like that. I like to do my own research, and that's why I like to pick individual stocks and shares. Where I find this particularly interesting is that I can look at what they've chosen and see which ones I think are good, which ones I think are not so good, and then make my own ETF, if you like, but without the management charge. Although bear in mind, I'm using my time to create my own personal fund, if you like, to achieve my personal objectives. Now, who might this particular portfolio be good for? It's probably good for anybody who's looking for a monthly dividend income but isn't too concerned about capital gains. We've seen their track record on that, and I'm going to look at the charts in a moment and we're going to discuss where it could potentially be going. But for capital gain, I think right now, I think we've probably got a chance, and you'll see about that in a moment. In fact, I'll summarize all this at the end. I'm kind of skipping ahead of myself now and getting to a summary. I'm going to summarize at the end for you. So let's now look at the charts for this particular fund. Okay, so here's the 1 year share price. So you can see back in March, when everything else fell off a cliff, this one also did. And that makes perfect sense. If you remember, it's a basket of shares made up. It's a portfolio of dividend shares. They dropped in price, therefore this dropped in price as well, because it tracks that. It has since recovered and seems to have flattened off somewhat. As you see, back there in August it was $16. It dropped in October. That we will see corresponds with a drop in the dividend, which I will go through in a moment. And it has since increased. It went over $17 there, and it's currently sitting at $16.97 per share. But before the big dip, it was $23.17, and it was hovering in that $23 range, as you can see there. Now, if we look at a longer term chart, so I'll go the maximum term I can, you can see this hasn't really ever been so much a growth stock at all. It really has been pretty flat. You can see it had lows around the $24 mark, peaked up here around $29, and then dipped down. And if you look, since this kind of date here, 2015, August 2015, I'd say that's pretty flat myself. You know, sure, it's had the odd dip down to 22 and it's had the peaks up to 25, but it's basically trading in a range of $22 to $25, 25.86. So $22 to $25, $26 per share is the range it has been trading in. But bear in mind, that's a basket of shares, so it's not like we can analyze it in the same way as I'd analyze a normal stock, where I could look at its balance sheet and look at its income statement. because it's a mixture of shares. The only way to do that is to analyze each of those individual shares, companies if you like, and see how they are performing, which would obviously make for a very, very long video if I was to do that. If you think when I do my versus videos, they're a 30-minute video, they take me a couple of days to produce because I have to analyze and research two companies in depth and then go through all the financials and then film the video, then edit the video, and you end up with a 30-minute video that's, like I say, taking me over 2 days to produce usually. If I was to do this with however many stocks, about 30-ish, 40-ish stocks in there, can you imagine how long that would take me to produce? So obviously I can't do that, that's not realistic for video, and the video would be ridiculously long. No one would be interested in watching it. So I haven't done that for that exact reason, but that's really what I would be looking to do if I was really serious about investing in this particular company. I'd want to get a good handle on what are the companies that this ETF is invested in. But on the surface of it, its dividend yield certainly looks high. Let's look at that next. We'll go to dividend yield. You can see stability of share price wise in terms of holding off the volatility. I'd say they've done a pretty good job. It's basically stayed static. For someone who's was looking for a pension, if you like, it's not bad at all. They've got a very good income whereby the yield has stayed pretty strong whilst the share price has stayed pretty static. Now then, that leads us to the dip. The share price has dipped. So you could say there's a good chance of this recouping. And if you look at the 52-week high, it's $22.10. I can tell you that it's currently down 23.56% from its 52-week high. So it's currently down 23.56% from its 52-week high, which means it's got that room to go back if the companies that it is invested in do go back to their pre-pandemic levels, which, you know, vaccines coming out, it's quite plausible. So if you're expecting that it's going to go back to pre-pandemic levels in the next 5 years, you've actually got quite a good upside there for capital growth. But once it gets back to where it was, I wouldn't expect it to grow much further. It's one whereby I would expect it to, for want of a better description, bobble along. So this is one I'd consider buying maybe as a comeback play. You'd maybe buy it for the recovery, and then once it breaches $22 per share, that's when you might want to consider selling out of it. You know it's not going to breach $26 per share for a long, long time. It's sat in a range of $21 to $26 per share for the last 5 years. It's currently well below that range. So realistically, once it gets back into that range, unless you're happy to just hold it for the income, in which case absolutely fine, it's one you might want to consider selling out of, taking some profit, and then putting into other high yield dividend stocks if that's the way you're wanting to invest. And that's what I would personally be considering doing if I was to buy into this stock. It's one I would probably buy into, hold until it gets to a certain level, like say over $22 per share, at which point I'd probably then look at selling out so that I could invest in other shares. Obviously, that's dependent on what opportunities are available at that point in time. Now, let's have a quick look at the dividend, because that's important. We're looking at a share that you are wanting to buy for the purpose of getting a passive income. Has it performed in that? Let's look at that now. So here's what Seeking Alpha show as the dividend summary. It shows a dividend yield of 8.31%, an annual payout of $1.41, and a 5-year growth of 3.37%. Now that 8.31%, I need you to be aware that that is higher than they quoted on their own website, and it's higher than what I've calculated as well. And I'm going to go through what I've calculated in just a moment so you can see. So here is the history, and there's all time. So you can see it has paid out every single month. It had a dip there, that was a particularly bad month, before recovering back up. And you can see that's gone up and it's gone down. So it's currently paying just under 10 cents per share, as you can see there. It has been paying higher. It dropped down in March, it dropped again, and then it dropped again, and it's dropped again in October. So it's been dropping that dividend down a lot during 2020, during the pandemic, which tells you that the companies it's investing in have either been reducing their dividends or have kept the dividends the same, and maybe some suspended, and that's why you've got the drop there. And like I say, without looking into each one of those companies, we won't know. But if we look into those companies, you'll see I would be surprised if some of them haven't reduced their dividend, and that is what has caused this to happen, which has in turn, of course, caused the share price to fall. If the dividend increases, that's when the share price will start to increase again. So that's where I think it's potentially good as a comeback play, because if you look at its current dividend levels on this chart here, you can see it's a lot lower than it's historically been, just like its share price is. So you'll see how this kind of mirrors the share price. So that's why I'm saying this is probably not a bad time to buy for a comeback, because you buy it now, it'll then rise its dividend back up over the next maybe 5 to 7 years. At the same period of time, the share price will go back up. You'll then be left with a bigger monthly income than you initially bought, if you like, and a bigger capital value than you initially bought. And then you've got the choice. Like I say, you can sell out of it if you want to and move it into something else that may have more room for growth, or you might just decide, actually, all I want is the income. It's a nice income. It's been stable. It's paying every month. I'll just keep hold of it. And that's your choice to make, isn't it? But one thing to bear in mind is the actual dividend yield. Remember how I said it's different to what all of these things are showing? I'm going to show you how I have worked it out. I've worked it out based on its current monthly income, which is what you see on the screen now, which is just less than 10 cents per share. And this slide here tells you how I've worked it out. So the most recent monthly dividend of 0.0995 per share per month equals $1.19 per share per year. That equates to 7.01% dividend yield, which, let's be honest, is a really good dividend yield, and it has been paying it every month for the past 7 years since the fund was started. So in respect of, does it deliver what it claims to deliver? Yeah, actually, I think this fund absolutely delivers what it claims to deliver. The only thing I would say you could give it a weakness on is, you'd say, the volatility side, because it has taken such a hit in the recent years, in 2020 even. But it was before that. If you remember, we looked at that chart and it was staying in that band between the $21 and $26 per share range. It's currently, like I say, just under $17 per share. But then you have to remember, is after all a basket of shares, and the basket of shares it represents have fallen in price, and so of course it's fallen in price. That's absolutely to be expected. You have to take a view on, do you think those shares will recover? Just glancing over it, I think they probably will, but like I say, I have not researched each one of these individual shares to be sure, and that is what you would want to do really before investing in it. But if you were happy to just trust it, that's your call. I really hope you found this video useful, and as I said, I'll put a link now there to the monthly dividend playlist, so if you're interested in that and seeing what monthly dividend stocks and shares I like, that will be there now for you to view. Other than that, thanks for watching, and bye bye!